Good evening, all. Ira Epstein, and here you are with your Spider ETF stock market wrap-up. And this wrap-up is for the evening, and we're on May 2nd, Tuesday, 2023. Well, in the aftermarket, Ford down pretty good, AMD down. I liked what Ford said. You know, Ford's numbers look good until you dove in and you see that they're losing about $3 billion on electric cars, and they cut the price of their Mustang, their E-Mach, I guess that's what they call it, by about 7% to compete with Tesla. But I liked what Jim Foley said. He opened my eyes up. It's no longer about the cars by themselves. It's going to be about the software updates. It's going to be about the subscriptions. It's going to be how you can boost your car. I've even seen where you can pay more money and get an extra 90 horsepower by a software upgrade. And if you don't pay the money, you don't get it. I think it's Mercedes that's doing that. So you're getting this where the companies are embracing it. They're young. They'll figure it out, young being in the electric car business, but they will figure it out. But that opened up me. I got a better feel for what this business is going to be, the subscription content. I mean, you buy your car right now and you hope you go back to a dealership, but you know, an electric car doesn't have to go to a dealership. They've proven that anywhere near as often. It has less moving parts. So how do you make continuing money on it? This is it. Remember the old days where we'd have our, get a CD for our GPS system and you'd slip it in under your seat or in your glove compartment and it would update everything? Well, you know, that went away when you had your phone and you had your Apple Play and whatever. Here's another way for that. Very clever. Opened my eyes up. Doesn't mean I'm stupid, but I get the game now. A sea of mixed colors. All right. A lot of markets got hit today. You know tomorrow's the FOMC, the Fed day. Expect them to go up a quarter point. Expect the European Central Bank to go up a quarter point, if not more. Expect on the jobs report, they're looking for 180,000 new jobs. In the JOLTS number, which are the job openings and the turnover rates and so on, came in, I think, at a 9.5 number. So the number is slipping down, and people are staying in their jobs a bit longer. I don't think they're expecting the raises the way that they were. So that part of the market seems to be maturing out. Now the question is the debt ceiling and these other reports that come out, and how do you handle it? You saw the stock market go into a state of collapse today, but I think traders missed what it was all about. I didn't. I was telling people this morning, I'm looking, wake up in the morning, get up, going for a breakfast every man. Remember that song? Okay. Well, to make a long story short, I'm looking for the Reserve Bank of Australia to have sat pat. And I go, what? They went up 25 basis points. And I'm reading why. Sticky inflation. Forget all the fluff words. That's what it is. Sticky enough where now they're concerned that this pause isn't doing the job. They thought the trajectory would roll over. Well, isn't that what the naysayers in America keep saying? That the trajectory of all this, the Fed is one and done, and it's going to roll. I think there was a wake-up call. A much smaller economy. I get it. I get the people that are going to say, no, Ira, you don't have it. You're wrong. I don't know if I'm wrong. I have a sneaking feeling that is the first of many central banks going to run into the same predicament, okay? When we take a look at Apple, I'm going to warn you, you've got earnings coming up. You've got all these deals coming out. This chart's had a nice run. If you take a look, the pattern has got a lower low, higher high. That's not a trend. That is a vertical price rise. You can see how the market's over the 18-day average of closes. So where's the resistance? Oh, excuse me. What number did it go to? Do you see the Bollinger Band? What happens when you typically get up to a Bollinger Band? That becomes a resistance zone. Why? Because 95% of the time, the market will stay within the bands. So it's a natural, evolving, moving higher, lower, or sideways band that gives you a pretty good idea of where resistance will be. Overbought? Absolutely. So lower low, higher high, overbought market in front of Apple's earnings. What do you think I think the pro money did? Bye, bye, Miss American, bye. Right? Schwab. Did you see what happened today with Schwab and other parts of this market, they got hit with the banks. PacWest down 25% today. Other banks down hard. The bank index is getting smashed. So what is going on and why are these markets getting hit as hard as they are? Lower highs, lower lows, 49.07 first support in the market. You got to 49.05. You see that? So you hit the Bollinger Bands, you stopped, oversold. I think professional money lifted some of their, if they were short, some of the money. You're caught between the upper and lower band, churning here, but it's not pretty. The vultures are out and after the remaining weak sisters. I am not saying Schwab is a weak bank. I am saying PacWest is in everybody's eyesight. Is that a possible another one? When we look at gasoline, it can't hold. It just came apart right here. Number one, it's early. How many schools are out with the kids going with their parents on trips right now? Do you know of any? What's the weather like in good part of the countries? 50s, 60s? That's not where you're taking your vacation yet. I know what's down south. This isn't the time of the year that people are on vacation. This is when the kids are ending up their school years, they're doing whatever, then the families leave. Let that happen. But something negative happened here. This market was trying to make a stand against the 200 and the 100-day average, and it's a total failure. You could get more short selling into this 55, 57 before the market finds any form of support, and you're getting an embedded reading. This is not the place to be yet. It wasn't when the market broke through that, right there where I'm pointing. That was the end of the game. You broke the pattern of higher lows, higher highs. Did I think you were going to do this? Absolutely not. Not even close. But I knew enough on my work. There was no buy signal left on the chart. In Tesla, I had told clients to get short too soon. Yes, short. And I got knocked out of this the other day with a loss in the chart. And now the market's back basically lower than where I was telling them to go short. I feel like an amateur on it, but it happens. It had lost the embedded reading. So if you and I come back here and we take a look, here you are, you got your embedded reading. So I'm waiting to get the short sales off on the rallies. You see that? Now, you get a reading over 21, I got to be out of the market. That's what my work says. And the next day you don't re-embed. So I don't care that it's falling back today. It means nothing to me. You've lost the embedded reading. I don't belong looking at that market for new trades. In XLF, they squeaked one out here too. I thought that the market would be a short sale here and not get over that high. I've had some good winners, don't get me wrong. This is not an altogether bad week. I've told clients, and I like the short side of this market, thinking you might be getting down there. But now I don't want to see it back over the highs of yesterday. I think that's going to be important, 101.11. In SOX, all I was looking for was support against the 100-day average in the lower Bollinger Band for a bounce. But I'm not seeing anything good yet. AMD didn't look good to me in their aftermarket trade and so on. I'm not seeing anything I like there. Home builders. As this market came up, I know I said it to you yesterday. I said, might be time for you to sit back and go, I don't want to be into some of this stuff now in front of the Fed. All right, what's it going to do to interest rates? What's that going to do to this market? This market tried to break, got to 69.12, closed near the highs, and it's keeping the embedded reading. Take a look. You've got your numbers well over the 80s for days in a row here, all right? So that is a sign of strength, but I'd rather get through the Fed and see what that does for this than do anything else. And you'll say, well, Ira, I should have bought it. It's up here now. You made me miss it. I didn't make you miss anything. I'm just saying I'd prefer not to go through it. On the energy sector, I've been in the bearish camp, lower highs, lower lows. I thought the market would do a better job of holding it to 200 in the Bollinger Band. And frankly, X today, that's exactly what it was doing. But today was the cave-in day. The market, I really believe the Reserve Bank of Australia raising rates, that's what I think, did this market in. I think the market got spooked and said, oh, wait a minute here. That's a bank that made its move. It's not anywhere near the size of our economy, obviously, but it's a harbinger. Gold market, soon as the markets fell here, did you see how gold got a bid all day long? People are running to the gold market saying, we don't know what's going on in the U.S. We don't know what's going on with this debt ceiling, interest rate hikes around the world. Maybe that slows down economies. Maybe we're better off with the gold. And I happen to think that the dollar's making a peak here, so I like what I'm seeing in the gold. Silver caught between the lower and upper Bollinger Band, just whipsawing back and forth. Copper. Well, if all these economies are slowing down, be it Europe with rate hikes, be it us with rate hikes, Australia, how much demand is there for the goods that require the copper right now? That becomes the question. So a slowdown here showing. Now you get back over the highs of Monday. I want to rethink my idea. But until the market gets back over 40.23, I think the bears have control of this market. In TLT, you couldn't get me near this or BND or EFA. Time to be away from those. In the dollar, first challenge today of the 100-day average in the upper band. What do you think if you were sitting next to me would happen to your rib cage? I'd have gone, hey, you're long. Why are you just sitting? First challenge, what are you supposed to do? And out you go. You're overbought, and that's what I think the pro trader did. I think they walked away, and I think on this break, you're finding your support at the 18-day average in FXE, but I don't think traders are going to do much with it. Now, I'm going to be swamped over the next 48 hours as I write about what's going on in the U.S., what's going to go on in the European Central Bank, and on Friday, the jobs report where they're looking for 180,000 new jobs. You want to see what I say? Want to follow what I do? I write market reports Monday through Thursday, twice daily. One published before noon Central Time, the other before 8 p.m. Central Time. And then on Friday morning one, and on Sunday night, I write another one. I'd like to give it to you if you haven't tried them. Move your cursor up here for free offers. It'll take you right there. Or go to our website at iraepstein.com. Free offers. That'll take care of it. I'm Ira. You have yourself a great trading day. I'll talk to you first thing tomorrow in my morning subscriber video. And you can always hit join me if you're watching me on YouTube at the blue button. That's how you do it. Take care.